Morning, your knee hurts.
All right, that was a little bit longer break than we anticipated, so we'll get this meeting back in order here. We're in the action section of the agenda. The first action item we're going to be addressing will be the consent item number 2, which was pulled. So this is acknowledged receipt for the 2012 year-end claim report, page 10 of the agenda. Director Benson, you asked to have this item pulled. If you'd lead the discussion on this, please.
Sure. I just wanted to get a quick review and let the public be made aware. I guess we get quarterly reports. Do you want to talk about that, how the reports come quarterly?
Yeah, this Kerry Van Meber, Officer of Security Claims Investigations and Safety. Yeah, we put a quarterly report out regularly. This was a combination of, obviously because of year end, so we bypassed the fourth quarter, just put everything together in this report.
Okay. And then my question was related to the Calapat flooding claims and getting a status update on that. If we've paid any claims out in Calapat, I noticed that one flooding in Calapat was paid, but I didn't know if it wasn't related to that specific incident or...
That was after we had this looked at by our experts, the folks we brought in. The recommendation was only one of the claims deemed necessary to pay. The rest of them, they felt we should deny them.
Where do we stand on the Calapat situation when that flooding happened and then following up? I think there were some cards that were given out.
Could you answer that, Jesse?
Yeah, we had credit cards given out, yes. And
that's bullshit.
We ended up, a lot of people didn't take them, so we ended up having, I don't know, a dozen or so left over.
Okay.
But the ones that wanted them did get them, yeah.
I think actually Jennifer Goodsell, do you recall the total on that?
Field.
The board met in special open session in Calipatria, and at the time I think that we went up to the general manager's assigning authority of $200,000, and we came in considerably less than that.
We did. We issued 18 $500 gift cards. We issued several different vouchers to cover the cost of mattresses and appliances that were damaged as a result of the flood. And we also paid for housing at the Calipatria Inn for 3 to 4 different residents for up to 2 months after the event. And I want to say total, we were looking at about $30,000 was all we spent.
Attorneys.
So was the Calipatria flooding claims on farm ground, all these claims here that were denied, or were they related to personal residences?
It's a combination of both.
Okay.
Yeah.
But I'd be happy to get the board an updated spreadsheet as to what it was that we paid out to each of the residents as a result of the $200,000 approval from the board.
So if it was a flooding in a field, it was more prone to be paid out than inside the city limits?
Not necessarily.
Necessarily.
No.
Only if it was an IID system that caused it.
Right.
So if these items are approved, that means they've already been paid and funded?
That's correct.
I have a question, Mr. Chairman.
Yes.
Is there a process for appealing on the denials? And I'm speaking specifically of item number 91, the little Montessori school. It's claim number 12104.1.
If a claim's denied, they have 6 months to respond.
Okay. So it's too late for them to respond.
If they haven't responded yet, yes.
Do they know that?
Yes. They're sent a letter addressing that.
And so, Carrie, you're familiar with these claims individually if we talk about them?
Not right now, no. I'd have to get, there's just so many here. So you can keep it in perspective, in year 2012, my investigation group investigated approximately 1,600 incidences, including these.
I would like to, if possible, find out what the parameters were and why this was denied. This is a place for children. It's a school, and it's a school for little children. And without, at the risk of sounding arbitrary, I'd like very much to know why this claim was denied.
I can pull that claim.
Thank you very much.
Get the details.
So, and then if we take action on this today, there's some are approved and some are denied. If they're denied, then they're out of the appeals process.
If the 6 months has passed, they're beyond, well, there are some circumstances where they have up to a year, but those, not very often.
What about the item if they're listed as pending? Are they also in the 6-month window, or is
Those
that?
are pending, but they have not been acted upon. But the ones you see listed here as pending, they all have since been acted upon since this was at the end of 2012. They are all acted upon at this point. Even though they say pending here, enough time has passed, they have been acted upon.
So do you know the outcome of those, the ones that are listed as pending? The last ones, the items 120,
12217.1 through 12274.2 have all been acted upon, and 2 were approved and the rest were denied.
do you know which 2 were approved?
12217.1 Trans Pack Solutions was approved, and 12648.1 Nyland Sanitary District was approved. But I couldn't give you the details on why, because I don't have that in front of me either.
Mr. Chairman, I would like to know what the possibility is of delaying the vote on this until, at least personally, I'm able to see some of these denials. As I see them compared to the approvals, I'm concerned.
Well, just so you get a little history, all of the denials used to come to the board, and it was decided sometime last year that, I think it was last year, the board did not want to be encumbered by looking at every single one of them. So it was done by a different process.
Right. I am not encumbered by looking at the needs of each one of these constituents.
Yeah, we also wanted to see the ones that were approved because we were only seeing the ones that were denied.
Right.
So that was part of the change in the reporting.
And is that done in open or closed session?
When
The review of the claims?
it was, well, it was actually just voted upon. You got it in your package. The claim was in there. It was up to a board member, I guess, to review them and then act upon them in the board,
Okay.
in the board meeting.
But this is the first time this newly seated board has seen this
That's
type
correct,
of report.
right.
So this is a good time for input from the new board members if
Yes.
they want to see this in a different format or.
Mr. President, if I may, again, some of that institutional memory, sometimes it's a curse, I guess. But the way it was back in 96 through 04, I thought it was very sufficient. I mean, it was in your board packet. You didn't get wads of them like that. They came in routinely, and you read the claim and what it was, and you could make a decision as whether you thought it was valid or invalid, or if you agreed with it or disagreed with it. And that wasn't a bad way to get these things, and it worked well. And yes, we did act on them. And I, for one, am not the other board. I way back board, and it was. I thought it was okay the way it was, but apparently it's been changed, and I wouldn't mind going back to the way it was. Just me.
Back then, were they bringing you the ones that were approved also?
No, it was just the denials.
I think that I believe it was just the ones that were denied, but we actually got them when they were filed. Though I think when they were filed, we would see them as new cases. But anyway, that's the way it was. I wouldn't mind it going back to it.
Okay, well, this is before us today for action, so if...
I'll second Director Galindo's motion to table.
Thank you, Director Hanks.
Call for the vote.
Call for the vote to table. Okay, we'll bring this back to us at a later date. Thank you.
You be giving us instructions on exactly what it is you're looking for, or our lead counsel, or who?
Right.
Okay.
Correct.
Thank you.
Okay, this takes us to action item 10. discussion action item to change representation related to the State Water Resource Control Board's petition. Page 88 of the agenda. And, excuse me.
You want me to jump in there? In keeping with the action that we took in substituting counsel on the coordinated cases, the QSA coordinated cases, I'm asking the board to take action to follow suit so that there is clarity and substitute counsel on the petition.
For further information, the petition is an item that was being worked on with the Allen Matkins law firm in regards to amending water deliveries to the IID in regards to coverage or inflows to the Salton Sea per QSA mitigation requirements. Is that fair to say, Mr. Kelly?
This is a joint petition in concert with San Diego County Water Authority, and it's currently abeyance for the new environmental and the CEQA required public comment. So we are in agreement with Director Hanks' call for continuity.
Director Hanks, is that a motion you made?
Yeah, I'm in keeping with the QSA coordinated cases action that we took in closed session March 1st, and also due to the fact that the SEIR in this petition may not be consistent with our settlement talks that are ongoing. I'm asking for time for our substitute counsel to review it and discuss it with the client, which is this board. So my motion is to substitute counsel and appoint LPRA as our attorney of record on this case.
And is there a date involved in that? Is that immediate substitution or?
Immediate.
I second that motion.
So we have a motion from Director Hanks and a second from Director Glendale. Any further questions or discussion?
I do. How far along are we in this process, and how close are we to doing whatever we were trying to do? I mean, I don't want to cut off my nose to spite my face.
This process should culminate by years in a decision by the state board. So a change such as this one ought to occur with some speed.
I might add that LPRA was in agreement when this was filed. However, your comment about how far along are we with this, and I'd just like to know exactly what it is, because it had very limited discussion with this board, and in reviewing the SEIR, it appears to me that every intention is that the sea is incapable of being restored, and the plan is to dry it up.
Mr. DeMars has reviewed the document, going back to the time that he first became engaged here with IID, and I believe that he's clearly going to be doing a lot, but he's obviously capable of weaving into this document.
Okay, so you don't think there's any problem with him for time and or wherever we are in this arduous journey to take a hand off and do this?
On the contrary, I think it's probably the best shot at keeping the petition on track.
That's what I just said. He's online. He's competent that he can take the hand off and take this in then.
Yes.
Very well.
Okay, we have a motion from
Yeah,
Director.
in the event that settlement talks do succeed, then this issue might be moot anyway, or need modification.
You mean if they do not succeed?
Well, either way.
If there's any changes needed to the petition, then that would be a question I'd bring up is, can we amend the petition in any way, or is it already filed and moving forward with the process?
I don't know the answer to that. I'm sure that was considered by Mr. DeMars.
Okay.
Motion from Director Hanks, second from Director Galindo to replace Alan Atkins' firm with the, what's the initials?
LPRA.
LPRA firm regarding to the petition, joint petition. Further questions or discussion?
I would just say that I think this board needs to be, I did talk to Mr. Dumars, and he feels completely engaged in the process already, and this wouldn't further complicate his arrangement because this feeds into the big picture. But we do need to engage counsel for CEQA issues related to specific CEQA outside of the EIR process, and working through that. I would just ask that we do seek additional counsel outside to help on that, because there are a lot of issues related to CEQA.
I believe
and it's a very big document.
I believe that Mr. DeMars and Mr. Redmond are doing exactly that.
Okay.
One last question. Is there a possibility that the C2 provision in the QSA will be implemented, which would render this mute?
There is no possibility that C2, as reflected in the original water transfer agreement, could be revived. There is a possibility that something like it, with that relief of the mitigation water, revived, and that those proceeds could go into a restoration effort.
Okay, thank you.
Okay, any further questions, comments from the board? From the audience? Call for the vote. Item passes 5-0. Next action item is action item 11, adopt the 2013 budget and staffing plan as presented, page 89 of the agenda. Mr. Broking.
Yes. Last week, as part of the board's action on approving the new ECA formula in the resolution, we had planned on, and we had budgeted roughly $23 million of rate stabilization monies in the 2013 budget. We have since taken that out of the 2013 budget. And so the impact, all things being equal, is there's $23 million less revenue that will be in the 2013 budget for the Energy Department. We've gone back and recalculated our debt service coverage for the year. As I've discussed historically, we try to keep that at around 2 times coverage. Coverage for 2013 will only projected to be 1.4 times coverage. So when we go out to borrow money and meet with the rating agencies, that coverage ratio will not be viewed favorably. The odds are we will probably be downgraded by 1 or more of the rating agencies. Although it's my opinion that we'll still be able to borrow money, it just may be a little more expensive than it would have been otherwise. And that's just for the Energy Department. There's no impact on the Water Department. And then the only other thing I would like to mention is on the water side, and that has to do with water transfer. For our revenues, those are listed on B2 of the budget book, line 12. Those budget books that we passed out previously, I didn't pass them out again today. And then the water transfer expenses are in D35 to D43, and the Western Farmland expenses are in D44 of the budget book. So once, when the budget gets approved, obviously we will incorporate all these changes and prepare. And then I'm available for questions too.
Besides that, identifying those sections of the budget where those water transfer revenues and expenses and the Western Farmland items are listed, Mr. Broking, there's also a listing of positions at the Water Department that are tied to water transfer revenues.
Those are on the same pages, yes. Those are positions that are projected to work on the transfer. Those are not all full-time positions, but individuals who may spend a portion of their time on the transfer.
Understood. The board was handed in their packet here a budget resolution from last year, 40-2011. Is this item to be discussed in conjunction?
A couple of things I want to make sure is clear from the resolution that we passed last year and attached to the 2012 budget. I'm not quite sure if I'm following you, Greg, on the concern with the borrowing, but I just want to make sure it's understood. There's not an automatic $17 million that goes to the balancing authority fund.
That's correct. Not for 2013.
Okay, there is money set aside for 2012, but it's not continuing in 2013.
Right.
Okay. Okay, and it's my understanding that there will not be a net rate increase to the energy users this year.
That's correct. The budget reflects a 3.24 cents for the ECA for the entire year, and no base rate increase.
How are you going to show the credit given to the overcollection, the 37 million that we currently have? How is that going to show on the billing?
Well, it won't show on the billing, but every month we will bring it to the board for action to show how much we are using of that overcollection to maintain the rate at 3.24 cents.
Okay, so the rate, the 0.0324 will then show on the billing.
That's correct.
Okay. So even though it shows on the billing, you will be basically floating the ECA to determine your calculations.
Yeah, we will be floating it to see how much of the overcollection we need to use to maintain the 324.
And none of that is retroactive back to the first year.
Well, we've continued to we have continued to calculate the overcollection since the first of the year.
Yeah, okay.
So it is cumulative, and the rate has stayed constant at 324.
Okay, so what date will this take effect?
April 1.
April 1.
April 1,
Yes.
okay. I think I've got everything covered. Is there anything in here that signifies what we'll be doing next year? Or is this, we're just getting through this 1 year?
We're only asking approval for 2013. I think we do put some estimates in for 2014, but I can tell you that most of our effort is on 2013.
Okay, all right.
Greg, you made some comments about our bond rating, our abilities to borrow from the power department, and I thought the actions that we were taking in straightening out our rates, the 0.099 cents, effectively putting that back into the base rate would be viewed and could be viewed as a positive thing by these people, these rating agencies.
I think that will be viewed positively. It should be viewed positively. But by the same token, if we don't have that $23 million from the rate stabilization fund in the budget, our numbers are just not going to look as good. And so that certainly is not going to help us. Although the amount of money is still the same as $100 million, they still look at coverage levels.
Yeah, it is understood that the money's still there. We didn't impact that other than we restricted it and left it in the rate stabilization fund instead of putting it into the budget.
That's correct.
But the board has the right to move it in there if needed to meet our guarantee of no rate increase.
My recollection is that it was simply the restriction on it that if it was needed, we would come back to you.
Right.
Yes, and that will be explained to the rating agencies when we meet with them. When we borrow money and we meet with them, that will be explained to them.
So what we're saying is, effectively, is that it should be considered into that section of the budget, but it has restrictions on it until it came back to the board for further decision.
And that's how it will be explained. It's not in the budget, but it very well may be moved over this year.
On the commercial paper, the proposed budget of 50 million, is that new commercial paper or is that all in?
That's new. We
That's
currently
new.
have 25 million outstanding. We've budgeted an additional 50.
Okay, and when would we expect that to be rolled into a bond?
Well, I'll need to get with the Energy Department and get a 5-year capital plan so that we have that available when we meet with the rating agencies, because that's one thing that they zero in on is the infrastructure needs. So once, I know they're working on that, once we get that together, then we'll just have to look at our cash levels and when's the best time to go out and borrow the money.
Okay.
It's probably, once we make that decision, as I mentioned last week, I think it's probably do it in 2 or 3 months to issue debt. We use commercial paper to lower our cost of debt, as strange as it may seem. It's kind of strange to me, actually. By issuing commercial paper, that we can issue revenue bonds, as opposed to not issuing commercial paper and having to issue certificates of participation. Investors view revenue bonds more favorably, although in my mind the pledge of revenue is the same under either case. But if the revenues will pay less for a revenue bond, we'll give them a revenue bond compared to a certificate of participation.
You know, on page 95, the expenditure graph, which one is revenue and funding? The column on the left or the column on the right? The darker column. I can't.
Well, for 2013 budget, it's the one on the left.
Okay, the one on the left is revenue.
Mm-hmm.
So the deficit spending there, it will be covered by commercial paper. Is that what you're?
Yes, we don't, the expenditures, I think, shows all of our capital projects in there, and obviously we'll borrow money for some of them, which will reduce the
Would that also be because you're using up your internal funding of the over collection?
No, I don't think so.
Because it's not being counted as a revenue, right? You've already received it.
It is being counted as revenue. We've received it, but haven't included it as revenue yet.
Okay. I had a question. It was related more to a process. In the past, the idea had bought equipment, and then at some point they started getting into leases. Mm-hmm. And my assumption is that we're shifting back to buying heavy equipment internally in this budget.
That's correct.
Okay. Because I know that right when I got on the board, we turned in a tractor that had very few hours on it, and I think any farmer in the region would have bought it in a heartbeat because it really hadn't ever been used. And it just seems like the policy of this board should be that we're buying for the future and not just, trying to lease things quick and easy and not spend the money now, but really investing in the future. Okay. And then in line with these service trucks and line trucks, the fires, I was flipping through here. I noticed 2 line trucks were being purchased in this budget, but I don't know how many total we have and what the ages of those are. So I guess did Fleet send in a request and then they get chopped down in the process, or what is the typical process that the budget goes through? They
do send in requests along with the Energy Department, and it's part part of the budget process to discuss, what they need and what they can afford, and this is what
Okay.
we ended up with.
So it's more about what they can afford. You got to make more money, Carl.
Of our line trucks are somewhere between 2002 to 2007 vintage. So,
Hey, Greg, I've got a question. On page 95 of the agenda packet, on those 3 bar graphs, we're talking about revenues and expenditures. The 2012 budget had revenues projected at a little over between 540 and 560 million. And then the projected actual was down 500. Can you share with us what that is?
I believe most of it has to do with the fact that there was an over-collection in 2011 that we expected to use in 2012, but in fact, we had to use very little of it. I think we used something less than $2 million. So instead of bringing over $36 million in revenue, we brought over $2 and deferred the rest into 2013.
Those expenditures in the budget, those are primarily fuel and energy based.
Yes, power supply is by far the largest expenditure of the
Power
energy
supply, and so we budgeted for higher amounts. And the agency and the ratepayers have benefited from beneficial market conditions.
Yes.
The $50 million that was paid with the Fifth Amendment, I think Phase 1 was authorized to spend $25 million. Is the other $25 million still being withheld?
I think we're past that now.
We're up to 30, aren't we?
I think we're up to 30. Every year, as a year transpires and the clawback provision goes away, we bring that year's clawback that goes away as revenue. We bring that in as revenue to the water department.
Is that in this budget?
Yes.
Okay. Well, in the desire to beat the U.S. government passing their budget, I'll make a motion to approve the budget.
Motion from Director Hanks to approve the budget and staffing plan for the electrical, water, and centralized service departments of the IED.
I'll second.
And we have a second from Director Kuhn. Any other questions or discussion, Board?
I would just like to say for this next cycle, which probably starts next week.
It's already started.
The board used to have committees, and I would propose that we have a budget committee that sits alongside the finance department and kind of works through the process, and I'd be happy to sit on that committee.
Actually, there were 2 committees. There were 2 board members on water and 2 board members on power.
Okay.
We did away with committees some time ago.
But we have advisors to them. Maybe it's time to reassign advisors.
Certainly.
Yeah. As far as putting this budget together, I think you guys did start last year in June, and was. I think the first time I saw it was maybe in October. So it's not like it was staff didn't put a budget together.
Okay, so we've got a motion from Director Hanks and a second from Director Kuhn to pass the 2013 IED proposed budget and staffing plan. Further questions? Call for the vote. Item passes 5-0. Thank you, Greg. Next up, we'll have the action item 12, internal audit general matters, page 98 of the agenda. Presenting today is Betty Vanu.
Betty V.
Betty V.
Good afternoon, Director, Desert members of the board. I don't have any comments today, unless you have any questions or requests from me.
What audits are you working on right now?
On the QSA legal revenues and expenditures.
Okay.
And that's probably give it to the first draft with staff to go over to see the numbers, and then we're going to bring it to the board.
And then are you looking at power going forward as well? Or what's in the future? So I think Jim had asked some questions last meeting.
Legal expenses on energy.
Okay.
I don't remember. I don't have it on the this was a off-schedule request for the QSA, but I don't remember you asking us to do the one for the energy, but we most certainly can do it.
Well, I think Jim had asked for the sales and consumption.
Yeah.
What was it? Delivery, sales, consumption, and generation.
The sales of energy, generation of energy, and then our sales back into the grid. Kind of see where we're at.
Something that's similar that we did maybe 4 years ago or so.
Yeah. It's just,
Okay.
Just a single column.
And then I have a question too. Do you audit the trading function at some point? Now that we have it, because it wouldn't have been there in the past, so I don't know if there's a point in time when you start auditing trading.
Not per se the trading function. We did several audits leading to the change that we have right now with the scheduling. We audited the Coral function. We audited before the part of this request, sales of energy, purchase of energy, capacity transmission, all that. So that is kind of part of that. The trading floor itself with a detailed objective of what we're going to audit, no, we have not done it.
Okay. Well, I guess I can wait on that until we get further into the year.
So just for maybe I don't remember, and I apologize if I don't. I don't remember the board giving us this off-schedule audit request. So if you please give me that request so we can put it on schedule, I would be happy to do it.
You want to make the motion? Or? I'll make a motion to follow up on Jim's request to schedule the electrical generation. What would be generation, sales, and customer
and purchase.
And, yeah,
Okay.
and purchase. Yeah.
Second.
And what are you going to try to get out of this?
We want to just
The question
check
is
our system losses.
how much system loss is there? Something that's generated that's not.
Make a report and bring it to us?
Energy generated, energy sold,
And
energy consumed,
consume. That's right.
It's pretty much like
energy purchased.
you completed one on the water side.
Yes.
So maybe we could then figure out some methodology to track it, see where.
To track the system loss.
Okay, so there's been a motion and a second to request this kind of a report. All those in favor, please say aye. Aye.
Aye.
All right.
Those opposed? You got
Oh,
it.
thank you.
We have lights on the vote.
I forget about lights.
I was mixing it up. Okay,
Well, you were in La Quinta again, huh?
review. Item 13, action, review acknowledged a receipt of cash and investment audit dated February 7th, 2013. Presenting today is Craig Gottlieb.
Yes, good afternoon. We examine the various general ledger accounts that are dedicated to accounting for cash and investments in the district's general ledger. First of all, at the top of the report, you will see a line which we have in every report says risk exposure, and we have labeled this audit's risk exposure as high. That assessment is based on a measurement of likelihood and impact. And we believe that because this is cash, a very important asset at the district, that the risk exposure is high, especially in this time of increased focus on specific revenues of each of the departments, water and power, the proper allocation of expenses, and the subsequent cash flows and the reporting of them properly. This risk assessment of high goes unchallenged by all who reviewed this report. As you will see on this table, and this is on your page 100, on the far right column total, at December 31st, 2011, cash is reported in the SAP general ledger at $599,083,326, as it was reported in the district's financial statements at December 31st, 2011. That amount is correctly stated as a whole, and it's supported by underlying bank statements and reconciliations. The problem is that the district reports two funds, water and power, but the cash reported for each of those two funds in the district's SAP general ledger does not match what is reported in the financial statements. There is, as you can see in the top line, an unallocated amount of cash of $84,897,570. And as I will show you as we go through this report, that amount has been growing from zero at the time of SAP implementation, steadily growing over the years to where we are today, almost $85 million. And please remember that the SAP general ledger, and general ledger is not a term we hear much around the district, is the district's most basic and most important accounting records. All other amounts reported should flow from the general ledger, and it should accurately report the balance of all assets, liabilities, equity, revenues, and expenses. At this time, on the balance sheet, it does not. When recording cash receipts, cash disbursements, and other non-cash transactions in the general ledger, it is necessary to classify each and every transaction as either water, W, power, a P, joint, which is a J, and these three options are selected via an SAP drop-down menu called Business Area. No other options are available. But it is possible to not choose a business area for any given transaction and let SAP, through percentages that have been entered into it, do the allocating for you. Well, that process over the years has resulted in $85 million at this time that has not been classified, according to the general ledger, as either water or power. As the district publishes financial statements which report two operating funds, water and power, it is necessary for the finance department to allocate balance sheet general ledger account balances that have been classified as joint, and also those balances that have not been classified. Over the years, the finance department has tried to deal with this problem. And at this point, they're using an off-balance sheet program called Report Painter to allocate these costs for presentation, reporting to the public and to the board. But still, this is off general ledger. The general ledger at this point has never been trued up, or the cash has never been properly allocated to water and power. The finance department is presently in the process of assessing the cost and effort that will be required to implement a fund accounting system. Management has stated that if the decision is made to implement such a fund accounting system, the current issue will be addressed through that process. However, we believe that if the decision is made to not implement a fund accounting system, all joint and unclassified balances should nevertheless be allocated between water and power, as they have already been reported to the board and to the public. This will facilitate accurate reporting of the beginning balances of all activities which may be eventually selected for reporting in funds separate and distinct from the two operating funds. We believe that the finance department should in fact allocate this entire almost $85 million. Doing so will require an adjustment to the general ledger involving various general ledger accounts. On our meeting with responsible personnel in the Finance Department on January 9th, 2013, we provided the Finance Department with the specific general ledger accounts to be adjusted. And there are 7 of those in total. These are all accounts that experience high activity. The active accounts, the accounts payable accounts, those sorts of accounts, not so much investment accounts. Based on our beliefs, we would like to see the balance of cash presently reported as without business area to be 0. And the general ledger will report the same cash balances by fund as is reported in the funds of the district's financial statements. We recommend that the Finance Department develop a written process, a standard operating procedure, to properly classify all transactions as either water or power and properly allocate them between the 2 existing operating funds in an accurate and consistent manner, at least at the end of every operating cycle, which is annually, December 31st. Monthly is preferable. We believe that this final step of actually adjusting the general ledger so that the balance of unclassified cash is 0 should be included in an SOP and occur at the same frequency as closing activities occur, which is monthly. At December 30, the amount I was giving you of basically $85 million was as of December 31st, 2011. There has not been another financial statement issued since then, but our examination of the general ledger as of December 31st, 2012 tells us that this same $85 million has now grown to almost $106 million unallocated cash, which is allocated off general ledger for reporting. That's a $21 million increase in 1 year's time. We make these 2 recommendations, which have been accepted by management. If the decision is made to not proceed with the implementation of a fund accounting system, the Finance Department staff will simulate an adjustment to the general ledger in SAP in order to determine if the Finance Department can successfully distribute the unclassified cash balances between water and energy funds without impacting the allocation process utilized in the special ledger called Report Painter. If it is determined that the transfer can be made, then the Finance Department is to distribute the almost $85 million of cash recorded as without business area at December 31st, 2011 between the 2 funds, water and power. Secondly, develop an SOP to properly classify all transactions as water, power, or joint in an accurate and consistent manner at the same frequency as closing activities occur monthly. The SOP should include actually adjusting the general ledger so that the balance of unclassified cash is 0 at the end of each reporting period. Are there any questions?
I have a question, and it relates to the first page of your report. It shows water and power and then balance per general ledger and then financial statements.
Yes.
So is that a 50-50 split of that $84 million between the financial statements? It's pretty close.
It's pretty close, but it's not. The Energy Department gets $381 million. Excuse me.
No, if you take 251,
you get $34 million to the Water Department, $46 million to the Power Department.
Okay.
Would be the split.
Okay. So who decided that split? Was that your report painter? Or is that something that's done along the way?
It's Report Painter is not a program that we use in the internal audit section. That's a program that is used in the Finance Department to massage numbers for presentation to the board and to the public. What I did is I compared the grouping of many general ledger accounts and how they were split, water, power, a sort of fund accounting already at the district, to what was reported in the financial statements. And the difference is those numbers, 34 million and almost 47 million.
Okay. So could we get a comment from the CFO on Is this fixable, or what's the process you need to go through here?
Well, I think we're currently having a funds accounting assessment being conducted, and we're in the later stages of that assessment, and we will be making a presentation to the board once the consultants finish with their review. It is my intent that if we move forward with the fund accounting system, that we will be able to address those needs or concerns that are addressed in their audit report. And if we decide not to go with a new fund accounting system, I think the board knows one of my concerns since I've been here is the amount of time that it takes to get a cash statement, mainly because of the current accounting system. We will, and I don't know how, but we will find a way to solve that problem so that we can have a daily cash count, because that's my ultimate goal. I want to know on a daily basis how much cash we do have. So either way, I think we're working. I think we're in agreement with internal audit. We're working on solving the problem, and we expect to solve it over the next few months.
Craig, is this the first time you've done a cash and investment audit at the IID?
No, we did a comprehensive cash and investment audit probably 4 or 5 years ago, and now we revisited it. We would like to do some more auditing of cash and investments with some different focuses.
Was it trending in this direction 4 or 5 years ago?
We didn't see this in that report 4 or 5 years ago. That was the first cash and investments audit that had ever happened in many years at the district, and we had our hands full just getting some sort of an accounting for cash at that point. But this is the first time that this misstatement has been disclosed to the board or to the public in any way.
You know, when we had our external auditor's report, I didn't think about going this far on the balance of cash, but I did ask her on the joint expenditures were they fairly assigned, and she said yes. You know, and I was looking at fairness between the water and the energy department, but I didn't stop to think about assigning the cash. You know, but it gives you an indication how important fund accounting is. And it's not going to be cheap. You know, the analysis comes back, but when you're talking about a $500 million a year plus organization, you got to put it in perspective, and this board has that duty to make sure that we provide the necessary tools and equipment, training to assure this. So when you start looking at the cost when it comes up, take a look at the amount of money that's within this business area that we're trying to keep track of, and it gives you a little bit more of a perspective. Yes, it's going to be expensive, but what is the long-term value of it?
In my previous employment, I worked with various general ledgers for some local cities with software general ledgers that were much less sophisticated than SAP. But they accounted for many more funds, 15, 20, 25 funds in these various local cities in an accurate manner. There was never any unclassified cash that had to be massaged off general ledger for reporting purposes. Are there any more questions?
Go ahead.
Well, I think Craig's report points out that the amount of cash that we have in all our accounts agrees to the audited financial statements. So what Craig is talking about when accounts are being massaged, they're really we're allocating the costs or the cash. We're not really massaging anything. That has a bad connotation to me. We are allocating between water and energy And when we do that, the total, when you add up the total in the water department and the total in the energy department, it agrees, what's on our financial statements agrees with what we have in the bank or in all our cash accounts. So there's no difference there. I'm not disputing the fact that we probably need a little cleaner process, but it doesn't mean that the process is inaccurate. It just means it needs to be a little cleaner. And that's one of the reasons why we're having to fund accounting assessment, trying to come up a way through hopefully working with SAP, and as I said earlier, if we can't work through the SAP system, coming up with a way to fix it, to make it simpler somewhere else. But I don't want the board to think that there's any missing cash. There's no missing cash. It's all accounted for, and it's allocated between water and energy.
I have a question, Mr. Chairman. Or Greg, if all the funding is accounted for, then how can it be that these 84.9 million, in Craig's words, is unaccounted? The way that I'm understanding it is that this money is there, and we do not know whether it belongs to water or whether it belongs to energy. Therefore, that money's sitting there. Who's going to get this money, and what is this money going to be used for?
Let me try to answer your question. And I know I'm the third person up here, but in our report and what Craig and Greg, they both write of what they're saying. So we have these GL numbers, and they get allocated. So now money goes in one GL, and then you in and out, and so goes in here. Then it gets moved in here, so in here, move there, out there, so one has to be zero. This particular business area, because we have these business areas, like he said, water, power, and the joint, the money goes into this GL. It gets allocated between water, power, or joint, but it never leaves this GL, as it's supposed to. So when we find it, we didn't know what it is. So we had several meetings with the finance department, with the CFO, with Sandra and several of their staff, until we finally all agreed and understand what's going on. So when Craig says that it needs to be massaged by hand, is this particular without business area column, which is the second from the last on the first page of his report, without business area, and this $84 million, when money gets allocated, it goes in there, it gets allocated, but it doesn't leave this without business area, so it stays here. It's English not being my first language, I don't know if I really can I make sense, but it gets allocated, but when it gets allocated to the proper area, it gets allocated and does not leave this GL here. So it's not the dollars are there, it's just simply a method. It's simply a flaw, the way SAP was configured probably from the very beginning, and we just stumbled over this one right now. So that's what they said with the fund accounting. They're gonna look at this one and try to how to fix it, because probably this is here from day one, ever since SAP went live. We discovered it right now. We understand that since there's no money missing, we agree with the financial statements. It's just when the transactions are happening, somehow this without business area GL, it just keep receiving money in, but when it gets allocated out, it stays there also. It's almost like a carbon copy.
What are the typical accounts that it's receiving money from? Is it purchased, sold power? Is it?
And everything. We have all kinds of.
A little bit of everything?
Yeah. On this one particularly, we try to break it down to see what it is. So there's since 1999. So like I said, when we discovered it,
but, I mean, there's 20 million in the last year. You can identify the 20 million and say where that came from, right? It's pretty current.
Oh, they can only identify that there are 20 million more. They don't know where they came from.
When we look at these numbers, we look at the general ledger, any given general ledger account as a whole in SAP with no restrictions placed on it for water, power, or otherwise. And then we break it down. We say, SAP, just show us the water. SAP, just show us the power. And now show us what hasn't been allocated. We add the three together, and there we have the total.
But you can't dive into specific numbers?
At this level, no. That is an audit onto itself.
Okay.
It's thousands of lines that you're asking us to dive in and look at it. I know what you're saying. Yes.
The accounts that are affected, the payment clearing account, that's an account where payments are dispersed from.
Payments to who? Accounts?
Primarily payroll and payroll-associated liabilities. Then we have something called the Bank One Domestic Transfer Clearing Account. Then we have the AP Cashier Account, which is actually, it's the difference there is the opposite. This is a combination of some under and some over.
Okay,
but it's
fine.
7
That's
accounts.
fine. We're good.
Craig,
Thank you.
clarify something for me, please.
Yes.
Maybe I'm wrong, but this is the way I'm hearing this. There's currently $84 million in this fund, or in an account, that has not been assigned to anything.
There is almost 85 million that is accounted for at the total general ledger level, broken down into water and power, which at the district are not small things. Those are very important classifications. There are certain balances. Those two do not add up to the total. Water and power in these 7 accounts do not add up to the total reported at the highest level of SAP general ledger for these 7 given general ledger accounts. So the difference is accounts that have no business area assigned to them. And you see, we labeled that as such, without business area.
So, Craig, it looks like it's a negative. The 84 million is a negative?
Yes.
So actually, you didn't book the costs against the revenues on those accounts.
No, all I did was analyze the cash accounts. What was in cash? Water, power, unclassified.
But it's showing, so water's 251, financial statements 217. You're essentially 34 million short.
Exactly.
On the financial statement.
No, the financial statement we have to assume is the correct one. It's the general ledger that is incorrect.
So the general ledger is overstating it by 34 million.
Exactly.
Okay.
So you're looking for action from us to accept your report?
Yes, we are asking you to consider this report and vote on it and accept these 2 recommendations.
I make that motion.
I'll second.
We have a motion and a second to accept the report as presented. Any further discussion or questions?
Craig, would you mind repeating the recommendations? Please.
Line per line, or do you?
Just
It's right here.
Okay. If the decision is made not to proceed with the implementation of a fund accounting system, the finance department staff will simulate an adjustment to the general ledger in SAP in order to determine if the finance department can successfully distribute the unclassified cash balances between the water and energy funds without affecting the allocation process utilized in the special ledger. That's that report painter. If it is determined that the transfer can be made, then the finance department is to distribute $84,897,570 of cash recorded as without business area at December 31st, 2011 between the water and energy funds.
thank you.
And secondly, develop a standard operating procedure to properly classify all transactions as water, power, or joint in an accurate and consistent manner at the same frequency as closing activities occur, monthly. The SOP should include adjusting the general ledger so that the balance of unclassified cash is 0 at the end of each reporting period.
Thank you, Craig. No more questions, Mr. Chairman.
Okay, so we've had the recommendations read into the record, and we have a motion from Director Hanks and a second from Director Benson to accept the report as presented.
Motion was from Director
Kuhn, excuse me. To accept the report as presented along with any recommendations as provided. Further questions, discussion? Call for the vote. Item passes 5-0.
Thank you for your time.
Thank you, Craig. Next up is action item 14, approval of major work authorization number P6760 regarding the remote substation capacitor bank addition, page 104 of your agenda. And presenting today on this item is Mr. Sandoval.
Good afternoon. Last week on March the 11th, as recommended by the board, I made a presentation of the three projects, but the first one is the remote substation 92 kV capacitor bank addition to the Energy Consumer Advisory Committee. And we obtained unanimous support from, I believe it was 13 members that attended the meeting. And today I'm here to make a recommendation to the board.
That support was provided we passed a budget, which we have, so.
Well, we've already heard this in information. We've already had the presentation. So I'll make a motion to approve.
A motion from Director Kuhn for approval.
I'll second that.
And a second from Director Benson. Any further questions or discussion?
Yes, I have a question, Mr. Chairman. On the page 104, under financial impact, line 1 talks about the project. The estimated cost of the project is $2,117,350. The second line says that the project is in the capital budget. The last line mentions funding for the project has not yet been identified. Am I correct in understanding that we would approve this project, but we do not know what category the funding is going to come from?
It's, well, I think the project is in the proposed budget, and...
I understand that, but what category in the budget is this $2 million from?
Is it going to be out of the commercial paper? Or is it going to be part of the budget? Okay. Commercial paper? I think
see the recommendation.
that was the intent of the commercial paper, was to cover the
If I could answer that question.
Yeah, because
Yeah, Mr. Broking.
As part of the process of looking at their 5-year plan, we'll decide whether to use reserves or commercial paper to fund all of these projects, actually.
When will that decision be done? At the time that the project gets going? And how will the board know? We're approving a project. I have absolutely no problem with that. But how will we know where this money's going to come from? Isn't an intricate part of the budget is to categorize where every single penny comes from and where every single penny is going to go to, so that we don't rob Peter to pay Paul?
Yes, but the way we budget for bonding, we'll identify, say, $50 million of projects. We don't necessarily have identified which of the projects we'll use the $50 million for at the time of the budget, but overall, we know we'll use $50 million of bond money for certain projects. So this very well may be one that we use the bond money for. If we don't, we'll use the reserves and use other projects for the bond money, so that obviously that we don't go over the $50 million.
Well, then that gives the concept of using reserves money a completely different definition.
I misspoke. Not reserves, rates. Well, they'll be either funded from rates or through commercial paper or long-term debt.
Thank you.
So we have a motion and a second to approve this MWA. For any further questions or discussion? Call for the vote. Item passes 4-1. Next item is approval of amendment number 1 to major work authorization covering transitional cluster system upgrade development activities. This is action item 15 in the agenda, page 114. And Mr. Sandoval presenting.
Yes. Last Monday on March the 11th, I made the presentation to the Energy Consumer Advisory Committee, and also we obtained unanimous support from the committee, toward this project, and therefore I'm making a recommendation for the board to approve the amendment number 1 to the transitional cluster system upgrades development activities.
As with the one before, Mr. President, we've seen this. It was brought to us information, then was presented in La Quinta, and we need to move forward with it. I make a motion to approve.
We have a motion to approve from Director Kuhn. I'll second that. Second from Director Benson. Further questions?
Yeah, at the meeting in La Quinta, the question came up about the contingency.
That's the same question, aren't you?
Excuse me.
Go, Jim. Go, Jim.
Well, I did that, but I did it.
Man, got me grooving here, Jim.
This board meeting lasted too long.
You got my vote.
You thought I just listened to country western, huh? The question came up about the percent of the contingency. The previous one was 10%, and this one's 15%. What's the rationale for 5% on a project?
Yeah, the using of 50% contingency in this project is because of the early stages. This is development activities, preliminary engineering, right-of-way assessment, environmental permitting. There's a lot of unknowns to the project at this stage. Therefore, we ask for a higher than normal contingency, which is a 15%.
Director Hanks, in any project, our plus or minus 10% is a national standard when you're at your 90% or better of your engineering drawings. And early on in the process, you're going to use some historical reference. It's probably plus or minus 30%. As you get between 10 and 20% or 20 and 30% of your drawings, it's probably plus or minus 20. So they've developed enough information but they're not at that plus or minus 90% that he's asking for more contingency to finish this development process out.
Well, all I can say is it doesn't look favorable upon a planning group. Okay.
Excuse me, may I? Yeah. I just, if we know what we're doing with these projects, how can we have such a large amount for unknowns? It's like going to the grocery store. You have a grocery list, and there are some things you would have inevitably forgotten and gotten it, but how can you not know, or at least have an idea of what the unknowns are? This is a significant amount of money, Mr. Sandoval.
Well,
for unknowns.
In the case of the right-of-way assessment, you don't know how many properties might be affected with this route, the amount of work. In the case of the engineering, you're doing preliminary engineering. We got some findings, some structural analysis. Some of them were positive. Initially, we were considering that probably, like in case of Path 42, we'll have to replace a lot of the towers or do a significant amount of work. It happened that we found out that the original design, we found these drawings 2-3 years ago, called for bundle conductor. So that was a very positive finding that we didn't have at the time when we were putting this together. And that reduces significantly the amount of work and cost.
So do you not do a study and know where the properties that you're going to be working through are? I mean, I'm
No.
somewhat confused.
The stage they're in.
Okay.
I have to rely on other groups, I'm
Okay.
I'm engineering planning, not I
For
have
my ignorance in this field, thank you.
Yeah, I would just say also when I was a civil engineer, the design side, there's a lot of unknowns going into the design process. So that's why they're developing it and not building it right now.
We don't have a threshold of when a change order comes back to the board for approval. Huh? As long as it's within the range of the contingency, then a change order could eat up 15% and it doesn't have to come back to the board.
yeah, if it is within the contingency, no, we don't come back to the board.
If the board wishes, if we eat into that contingency, we'll bring a report back to the board that we are going into it.
Well, isn't that how it's supposed to work with the PMO? Whenever they see look like there's projections going into the contingency or the programs at risk.
Well, the PMO should be reporting on these monthly, and so you should be getting a monthly update on this report to see exactly what's happening on this. But you are, in fact, authorizing the contingency, but we are kind of jealous with that contingency. They need to go into an approval process, but what you're authorizing staff, you're authorizing this bucket, and there are some controls in place, and then there's a reporting function back to this board to keep you abreast of what's happening.
Do you ultimately look at each one of these yourself personally?
Absolutely.
I have one more question. Is this also, as the previous item, funding for the project has not yet been identified?
No, the funding of this project came from developers. They provided $6.1 million through the signature of generator interconnection agreements. They agreed to pay for this development activities. Eddie Pierce. This money is not from IID ratepayers.
Okay, we have a motion and a second to approve this MWA. This amendment, number 1, to major work authorization covering transitional cluster system. Any other questions or discussions?
Just one quick one, but I think I already answered my own question. The Section 37 Consultants Inc. will be performing the work?
Yes, we already completed the service agreement. This was a direct request from BLM staff to bring him on board to help them with their internal processes.
Okay.
I've got a question on the MWAs. Is it normal to just have them titled have a title or a name after it, or is there a specific project number to it?
In this particular case, we have four projects, 4 P numbers as part of the transmission expansion plan, and that's
So there's multiple projects within this one MWA,
correct.
and each project has its own P number.
Yes, to track all the expenses.
And then the action we're taking on today encompass all 4 P numbers, all 4 projects?
Correct. The development activities for the 4 projects.
Development activities for the 4 projects. Okay, we have a motion and a second to approve this transitional cluster system upgrades.
One more question. On the money that we had in the budget for balancing authority, where will that be used? I thought it was intended for this Path 42.
That it was exclusively for Path 42. Mr. Broking?
Originally, it was, but I think based on our discussions last week, it was supposed to be used for future debt service. The $17 million that we have in there.
I think
Use that for your bond, which would cover capital.
Pay debt service, yes.
But Director Hanks, that is for moving forward. That's for doing the RAS. That's for doing the actual construction and engineering on Path 42. This development activity is to develop all of these projects according to that transitional cluster to get them to the point to provide price certainty for it. This was, in fact, funded by the developers. So that's a different fund.
Okay, so this one is funded by developers?
Yes.
Make a motion to approve.
It's already on there.
You already got it? Okay.
Motion and a second to
Thanks a lot,
approve. Any other questions?
Call for the question.
Call for the vote. Item passes 4-1. Next up is page 122 of the agenda. Action item 16, approval of amendment number 2 to the major work authorization covering Coachella Valley to Ramon Devers 230 kV line upgrades related to Path 42. Mr. Sandoval.
Yes, this is the third MWA amendment that it was presented to the advisory committee last week, and also we got their full support. Therefore, we are recommending the board to approve amendment number 2 to Coachella Valley to Devers, the 30 kV line upgrade, also known as Path 42, and with an increase from the regional amount of $5.4 million, which will increase the regional expenditure under the regional MWA from $25.8 million to $31.2 million. And this includes 15% contingency. I would like to have a clarification, minor clarification. I think it was asked if the Coachella Valley substation was going to require additional land. And yes, indeed, this, because of the cap bank, 48 megawatt to 30 kV capacitor bank, we will require to have 60 by 150 feet additional land in order to install this capacitor bank. So yes, it's going to require additional land.
Going to start sounding like a parrot up here, but we've got this one before. It came to us in La Quinta. It's here now. The Energy Consumer Advisory Board approved this too?
Yes.
And then I believe it's time, make a motion to approve.
We have a motion to approve from Director Kuhn.
I'll second that as well.
And a second from Director Benson. Any other questions, discussions?
This one now also adds added protection for an outage like we experienced before. Does this help us protect for the outage issues that we were faced with?
Yes, it does.
Pardon?
Yes, it does.
Okay, thank you.
Motion is second. Any other questions? Call for the vote. Item passes 5-0. Next up is action item 17, approval of request for proposal number 921, an award of service agreement to Abengoa T&D Incorporated, page 134 of the agenda.
This is yours. Mr. President, I brought this issue to you in La Quinta. The evaluation committee looking at this project evaluated this. They selected Kinney Construction with our new evaluation process. I get an executive review in that process. When I looked at this issue, the evaluations, Kinney outweighed them because a local vendor and because they had not had the experience in the United States, but Abengoa didn't have the experience in the United States, but Abengoa is a viable construction company. They have done projects of this sort all over the world, South America, Europe. They're presently doing AES 8-minute energy project here. That large solar project, Abengoa, that's out by Gila Bend, they're doing that. It really comes down to a risk issue, and the risk of permitting is the issue here. In my mind, that's an acceptable risk. Abengoa is the low bidder in this process, and in my mind, I can't see why I need to pay $2.5 million more for this when I have a qualified contractor that's so close. So I had exercised my authority to override the selection committee and go to number 2 on this list and bringing that to a board for approval.
And you feel confident about your decision?
I think it's an acceptable risk that we can manage, and yes, I'm confident with that.
Then I make a motion to approve.
Motion to approve from Director Kuhn. Is there a second?
That as well.
Second from Director Benson. Any other questions, discussions from the board? Call for the vote. Item passes 5-0. Thank you, Mr. Stills. Our final item on the action agenda today is item 18, acknowledge receipt of the February 2013 Energy Cost Adjustment Report, page 138 of the agenda, and Sandra Ainsworth presenting.
And President Desert and board members, as Director Desert indicated, I've got a quick update on the February 2013 ECA for you. So for the month of February, our preliminary figures show that we overcollected $705,000 for the month of February. That takes us to a cumulative overcollection for the months of January and February of $1 million. So what that does to the cumulative total of the overcollection balance is it brings us to $37 million at the end of February. Questions?
Is this on the schedule that was assumed for the year already? Because there is a little bit of cyclicality to this, right?
There's a variance from what was projected. I believe that's your question.
Yeah.
So there is a variance. We were reflecting a slight undercollection of, I believe, approximately $300,000. Load did not come in, expenses were down, and that's what is being reflected here.
Okay. I'll move to approve the report.
Motion to approve the report from Director Benson.
I second the motion.
A second from Directors Galindo. Any further questions, discussions, board? Call for the vote. Item passes 5-0. That's
Thank
our
you.
last item of the day. We'll call this board meeting closed at 4:25 p.m.
What's that? This phone is done at home. Where that use it.